Can you imagine this? You've just sold your company and you've got $180 million sitting pretty in your bank account. But you end up borrowing money from your mates to pay for legal bills. This is not a crypto rug pull. That's Elon Musk's actual life in the early 2000s. Today we're diving deep into how Elon Musk risked it all. Not in theory, but literally. And what his story can teach us about mindset, conviction, and that fine line between genius and madness. If you've ever questioned whether you're making the right move with your investment, this video might just give you a fresh perspective. Welcome back to Wildpad X. Tony here. Today's 25th of April 2025. This is your daily dive into money, investing, crypto, and psychology behind our financial decisions. If you're on the journey to financial freedom or just want to know how billionaires go broke before going supersonic, consider to subscribe to the channel for the update. Right, let's take a quick look in the market. Bitcoin is now sitting at $93,000, ticking up just 0.7% over the past 24 hours. Ethereum is now trading at $1,700, and Tesla charging ahead at $259, a 3.4% jump today. Looks like the investors are back in Tesla's bandwagon after Elon confirmed that he'll scale back from working for Doge. Meanwhile, Cathie Wood and ARK Invest are doubling down on their future vision. They've now upped their Bitcoin price target to an eye-watering $2.4 million by 2030. Yeah, you've heard that right, 2.4 million apparently. ETFs and institutions are just getting started, and if ARK's thesis plays out, you don't need laser eyes. Just diamond hands and some serious patience. Okay, time for today's morning deep dive. Let's rewind to 2002. Elon Musk has just sold PayPal to eBay for $1.5 billion, and his cut was around $180 million. Now, a normal person might just stash half of it, buy a yacht, and start Instagramming sunsets from a little island. But Elon, he decided it was the perfect time to go all in on three wildly ambitious startups: SpaceX, Tesla, and Solar City. He didn't hedge, he didn't keep a rainy day fund. He took nearly every cent and poured it into ideas that most people consider science fiction or, frankly, financial suicide. And while these headlines made it sound bold, behind the scene it was pure chaos. By 2008, things were falling apart. Tesla was bleeding cash. The SpaceX has failed 3 rocket launches in a row, which is not ideal when your business model is making rockets. And Solar City was struggling to gain traction as well. Then came the real pressure, legal issues involving his divorce, which left him needing to pay expensive lawyers. Elon had to borrow money from his friend just to keep up with legal fees. It wasn't about rent or ramen noodles. It was about trying to keep his personal life from imploding while his professional life was balancing on a razor's edge. But then, like something out of a Christmas movie, the tide turned. On 24th of December 2008, NASA awarded SpaceX with a $1.6 billion contract. Tesla has also received emergency funding at the 11th hour. It wasn't luck, it was the payoff for stubborn, relentless belief. What wild isn't just that he survived the chaos, is that he chose it. He wasn't forced into these risks. He sought them out because he believed the world needed rockets that could land themselves and cars that doesn't guzzle petrol. Now, most of us aren't going to drop our life saving into electric cars and Mars-bound rockets, although I'm sure there's at least one crypto project trying. But there's a lesson in here. Musk's story reminded us that financial resilience isn't just about diversification and spreadsheet. It's about conviction, long-time vision, and the grit to endure ridicule, failure, and chaos on the way to building something extraordinary. So the next time you're hesitating on the long-term investment or panicking over the red candle on the Bitcoin chart, just remember, Elon had $180 million and still ended up phoning mate for a financial favor. And now he's doing 0G barrel rolls with billion-dollar contracts. Right, let's take a look at today's top news. The first news, according to new data, the supply of Bitcoin held on exchanges has been steadily decreasing. This usually signals long-term holder behavior as more Bitcoin is moved into cold storage or personal wallets. This is the kind of trend you'd love to see if you believe in scarcity driving value. When exchanges hold less Bitcoin, it reduces immediate selling pressure. And in the past, this pattern has preceded major bull runs. It could also mean that whales are accumulating quietly while retail investors are still waiting for the right time. The second news, PayPal just rolled out a new feature that allows users to earn yield on their holding of PYUSD, their very own US dollar-pegged stablecoin. This move pushes PayPal further into the DeFi-like space, blurring the line between traditional fintech and crypto finance. This could make stablecoin more appealing to average users who want return without volatility. It also poses a challenge to banks offering 0.5% on saving. If people can earn yield inside their PayPal wallet, who needs a bank? And our third and last news, New analysis shows that Bitcoin outflow from exchanges are starting to mimic accumulation pattern seen back in 2023. That period marked a critical time when smart money began scooping up BTC during price lows. Outflows are typically interpreted as bullish, suggesting investors are planning to hodl rather than to trade. It's also worth noting that public companies and institutions are continuing to add Bitcoin to their balance sheet, further tightening supplies. If history repeats itself, we could be in for a very, very interesting Q2 and Q3. Right, that's a wrap for today's episode. If you found this video helpful, please like and subscribe. Have a nice weekend, stay invested, and I'll see you next week.